Welcome to iFinance. In this video, I'd like to address 3 common bearish arguments for Tesla stock. As you'll see, these arguments don't hold any water upon closer inspection. Enjoy. Elon Musk recently said that Tesla was at this point game, set, and match. This statement was made in an interview with Lex Fridman, who is a research scientist at MIT. And indeed, I believe that this will make a huge difference 1 or 2 years ahead into the future. In fact, I think that by 2020 or 2021, it will become evident that Tesla was right on its camera approach to full self-driving, and that LiDAR wasn't viable, at least because it wasn't cheap enough to mass produce. If you wish to see my analysis on Tesla's AI and the viability of its potential robotaxi fleet, then check out my 2-part series on the subject. But still, regardless of Tesla's apparent lead in autonomous driving, the stock seems to be underperforming the rest of the stock market by quite a margin. In fact, it appears like there's no bottom for the stock. I believe this is because the prevailing narrative is that Tesla is not going to survive for another couple of years, or that its full self-driving technology is well behind the rest of the competition. However, recently, there's also been the trade war escalation that has also given bears another argument. They claim that tariffs will have a crippling effect on Tesla. Therefore, the current impasse between Trump and Xi is a reason to sell the stock. So let me try to address these issues one by one. First of all, even though bears claim that it was impossible, Tesla managed indeed to raise capital. And the latest figure we know is that Tesla raised roughly $2.7 billion. Tesla will use these funds to fund its operations, but also probably for expansion into Europe as well. After all, Tesla has no factories in Europe, which creates logistical problems. It is also worth noting that at the end of Q1 2019, Tesla had $2.2 billion in the bank. So if we put these two figures together, then Tesla's liquidity stands practically at $5 billion. Still, it is likely that cash is going to be less than that by the end of Q2 2019. This is because Tesla also bought some long-dated option calls on its stock, worth roughly $476 million. The purpose of this position was to hedge any upside beyond $309 per share. In a way, this is the stock price that is close to a reasonable valuation, at least in the short term. After all, this is why Tesla chose derivatives with that specific profit and loss profile. Also, I believe that this is a great financial move because it makes convertible issues much more attractive as a borrower. But at the same time, it allows lenders of the convertibles to participate in any upside of the stock without hurting Tesla shareholders. But I really want to stress the point that Tesla likely believes that $309 per share will happen sooner rather than later. After all, this is why they picked that price in particular, to hedge their exposure with options. So when you factor in all of these developments, it becomes evident that right now Tesla has enough liquidity for the foreseeable future. But more importantly, Tesla was free cash flow neutral in 2018. By most analyst estimates and common sense, it is reasonable to expect that further growth in Tesla's revenues will occur in 2019. And by this token, it is also likely that free cash flow will continue to improve in 2019. And if this is the case, then Tesla's cash cushion will likely expand from now on a year-to-year basis. And this would put to bed any particular bearish argument, at least as far as liquidity issues go. So for me, it is evident that there is no liquidity issues with Tesla, especially after the recent capital raise. Therefore, I think that there's no credible evidence that suggests that Tesla won't be able to keep operating as a going concern. Now let's touch the second argument, because for some reason bears think that Tesla isn't leading in autonomous driving. They claim that Tesla is dead last behind everyone else. So I think it is important to look at the facts. First of all, Tesla CEO Elon Musk thinks that the company is gonna be able to have full self-driving capabilities by the end of 2019. Then, by 2020, Musk believes that Tesla should have some type of regulatory approval to operate in some areas. After all, getting regulators to sign on to full self-driving on autonomous vehicles is gonna be a challenge, but I think that eventually they'll come around. So 2020 is reasonable, assuming that by the end of 2019, full self-driving is complete. I'll concede that these timetables are ambitious, but they are not impossible given the current state of the technology. Still, for some reason, bears seem to mistake Elon's optimism with fraudulent intentions, which I think is laughable, to be honest. However, don't take my word for it. Look around for yourself. No other mass-produced vehicle offers the same level of autonomy as Tesla's. They simply don't. Maybe there's a few cases here and there of assisted parking, maybe some Cadillacs or Mercedes-Benz, but there's nothing at the same level of Tesla right now. I suggest you watch my part 2 of the videos I made on robotaxis. There I go in depth on the viability of Tesla's full self-driving technology. However, one of the main takeaways you have to keep in mind is that Tesla right now has the necessary hardware to pull this off. You see, the only constraint right now is software, and software is continuously improving at an exponential rate due to AI and big data. So it is entirely possible that Elon's timeline, even though it appears optimistic right now, might actually be possible. After all, Tesla's full self-driving is now getting better at an exponential rate, and this rate of improvement is not intuitive for people because we're used to thinking in linear terms. But in real life, this type of improvements do occur, and with AI and big data, it is very likely that Tesla's full self-driving capabilities are improving at that rate. So let's contrast this type of technology that Tesla has with what the competition have, which is LiDAR. And right off the bat, LiDAR is currently too expensive to be part of a viable robotaxi. Not to mention that mass production is impossible unless LiDAR's cost drops down significantly. After all, right now LiDAR itself costs about $70,000 per vehicle. You can't pass this cost down to the consumer or make a robotaxi that is profitable when LiDAR costs that much. And even if Waymo manages to drop down to $7,500, it will still be too expensive. And even if Tesla's competitors manage to make LiDAR cheaper, they're still going to have to deal with its limitations. You see, LiDAR doesn't have the same amount of information that cameras have, and this is why applying AI algorithms to LiDAR's datasets is going to yield much more limited results, at least when you compare them to Tesla's. So I think that it is not only that Tesla is leading right now in autonomy, but in fact it is likely its lead is expanding even further. And finally, I'd like to tackle the third bearish argument, which is about the trade war with China. I will concede that trade war fears have some merit right now. This is because China is going to be a huge market for Tesla going forward. If tariffs remain in place, it will likely translate into substantial competitive disadvantages for Tesla versus other electric vehicle makers. This is because Teslas would cost up to 60% more than their Chinese counterparts, which should undoubtedly translate into lower sales than under a no-tariff scenario. However, investors need to keep in mind that Tesla is building a gigafactory in Shanghai that will have a production capacity of 500,000 vehicles per year, which would essentially triple Tesla's production capacity. And 500,000 vehicles is nothing in China. But more importantly, this would completely insulate Tesla from the trade war. This is because Tesla produces vehicles inside China. This is because once Tesla is able to produce vehicles inside China, they won't have to pay tariffs. So hopefully Tesla will have the Shanghai Gigafactory fully functional by the end of 2019, so that even if the trade war intensifies, Tesla won't become the collateral damage of another macroeconomic event. Still, I will grant bears that a slowdown in the Chinese economy could be problematic. However, keep in mind that even if China slows down, it's evident that many stocks will suffer, so Tesla wouldn't be necessarily an exception. And two, Tesla hasn't really tapped into the Chinese market yet, so at this point, even if they don't have that much incremental sales due to the trade war, any new sales in China will be net positive for Tesla's growth. So in conclusion, as you can see, none of the current arguments fueling the bearish narrative hold any water in the long term, and this is why I think Tesla is such a great long-term buy right now. Well, if you enjoyed the video, please don't forget to like, subscribe, and enable notifications. This way you will be notified whenever we post another video, plus you'll help the channel grow. Thank you very much. Have a great day.